What happens when the digital assets meant to decentralize finance become the central target of increasingly sophisticated attacks? Today, we're exploring the evolving landscape of cryptocurrency security threats and what they reveal about broader market dynamics and human behavior. The convergence of AI development and cryptocurrency markets has created a fascinating but concerning new frontier for both innovation and exploitation, with implications that extend far beyond individual investors. Let's start with context. The articles we're examining reveal several key developments in the cybersecurity landscape. Microsoft has identified multiple sophisticated threats targeting cryptocurrency wallets, most notably Stilachi Rat, a remote access Trojan capable of stealing credentials from 20 different wallet extensions, including major platforms like Coinbase, MetaMask, and Trust Wallet. Simultaneously, we're seeing malware like Amos and Llama stealers being distributed through social platforms like Reddit, specifically targeting cryptocurrency traders with fake versions of trading software. This is occurring against a backdrop where February alone saw nearly $1.53 billion in crypto losses to scams and hacks, with the Bybit hack accounting for $1.4 billion of that figure. What's particularly notable is how these attacks are becoming more sophisticated, employing techniques like anti-detection mechanisms and targeting the software supply chain rather than just end users. Now, let's examine the patterns. These developments reveal several significant trends worth analyzing. First, we're witnessing the professionalization of crypto crime. These aren't opportunistic attacks, but rather carefully orchestrated campaigns employing advanced technical capabilities. Second, attackers are increasingly targeting the infrastructure that supports crypto rather than just the assets themselves, focusing on wallet extensions, trading platforms, and the software supply chain. Third, there's a clear convergence between AI development and cryptocurrency security concerns, as evidenced by the $20 million funding round for Halliday's AI protocol aimed at improving DeFi application development. And finally, we're seeing a shift towards social engineering tactics that exploit community trust, particularly in spaces like Reddit, where cryptocurrency enthusiasts gather to share information. The sociological insights here are fascinating. What we're observing is a classic example of predator-prey coevolution playing out in digital markets. As cryptocurrency adoption increases and security measures improve, attackers develop increasingly sophisticated methods. There's also an interesting psychological dimension at play. The promise of free premium features, or cracked software, exploits both economic incentives and status-seeking behavior among traders. The desire to access premium tools without premium costs. Perhaps most telling is how these attacks target communities built on trust. Reddit threads where helpful posters engage with potential victims reveal how social proof and perceived expertise can override caution. This mirrors broader market behavior where perceived authority often trumps individual due diligence, a pattern we see repeatedly in investment bubbles and market corrections. Looking toward forecasting implications, several trends appear likely to develop. First, we can expect increasing investment in AI-driven security solutions as both offensive and defensive capabilities advance. Halliday's $20 million funding round for its agentic workflow protocol suggests significant market confidence in AI's role in securing decentralized finance. Second, regulatory pressure will likely intensify as the scale of attacks grows. The $1.53 billion lost in February alone creates substantial pressure for intervention. Third, we may see a bifurcation in the crypto market between highly secured, institutionally oriented platforms and more vulnerable consumer-facing options, similar to what occurred in traditional banking. Finally, these security concerns could accelerate the development of more secure blockchain architectures and identity verification systems, potentially addressing one of the key barriers to mainstream adoption. What are the market implications? For investors, these developments suggest several considerations. Cybersecurity firms focused on blockchain and cryptocurrency protection likely represent growth opportunities, particularly those employing AI-driven solutions. The increasing sophistication of attacks may drive consolidation among cryptocurrency exchanges and wallet providers, as smaller players struggle to maintain adequate security. For cryptocurrency projects themselves, security features may become key differentiators rather than just technical capabilities or transaction speeds. And more broadly, the growing integration of AI with blockchain technology, as seen with Halliday's protocol, suggests a convergent future where these technologies become increasingly interdependent, creating both new opportunities and vulnerabilities. Think of the current state as analogous to early internet banking, a period of both tremendous innovation and significant security challenges. Just as those early vulnerabilities didn't prevent the eventual mainstream adoption of online banking, today's cryptocurrency security challenges likely represent growing pains rather than existential threats. What's different, however, is the scale and speed of both innovation and exploitation. The financial incentives for both security breaches and security solutions are orders of magnitude larger, accelerating the evolutionary arms race. For markets, this creates a fascinating dynamic where security concerns simultaneously represent both significant risk factors and substantial investment opportunities. The winners in this landscape will likely be those who can navigate this tension effectively, building trust while maintaining the innovation that makes these technologies revolutionary in the first place.